Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if companies are actually doing as well as they say they are. And boy oh boy, does Live Ventures Incorporated give us a lot to unpack today. So Live Ventures Incorporated is a holding company, meaning it owns other companies. Think of it like a parent company that has several businesses under its umbrella. And today we are diving deep into their annual report for the year ended the 30th of September 2025. Now, most of this filing is filled with legal jargon and financial tables, but we're going to cut through the noise and focus on what actually matters. Let's start by zeroing in on the big picture numbers in their financial statements. For the year ended the 30th of September 2025, the company brought in a total revenue of $444.9 million. That sounds like a lot of money, but how does it stack up against the previous year? Well, in 2024, they pulled in $472.8 million, so that's a drop of about $27.9 million, or roughly 6% less revenue. This isn't ideal, and it shows that not all of their businesses are firing on all cylinders. Now, these numbers are spread across their different business segments. Their retail entertainment segment, which includes places like Vintage Stock, actually saw a nice boost, bringing in $77.5 million. That is about a 9% increase from the prior year. People are still loving buying and selling used movies, games, and collectibles, which is pretty cool. But then you look at their retail flooring segment, which includes flooring liquidators, and that revenue dropped by over 10% to $122.3 million. The report mentions this is partly because they sold off some stores, and also due to weaker demand, likely because of the tough housing market. When people aren't buying houses, they're less likely to buy new flooring. Looking at their liabilities, accounts payable were $27.4 million in 2025, down from $31 million the year before. This generally means they paid off some of their short-term debts to suppliers, which can be a good sign of managing cash flow. But a drop here also means they are not buying as much from their suppliers as before, which ties back into potentially lower revenues. When we look at their assets, property and equipment actually decreased from $82.9 million to $77.5 million. This suggests they might be selling off some assets perhaps to raise cash, or perhaps because some assets are no longer needed or fully depreciated. Now for the big debt picture, their total liabilities stand at a hefty $291.1 million in 2025. That is down from $334.7 million in 2024. This reduction in liabilities is a good sign, showing they are working to chip away at their overall debt. However, it's still a substantial amount of money they owe. But here is where things get really interesting. After a big loss of $26.7 million in 2024, the company reported a net income of $22.7 million in 2025. That's a massive swing and a huge turnaround. What caused this? Well, several one-time events played a big role, like a gain of over $22 million from modifying a seller note, and another gain of about $2.8 million from settling an earnout liability. It is great to see profitability, but it is definitely worth noting that these weren't purely from ongoing operations. When we look at adjusted EBITDA, a measure that strips out some non-cash expenses and one-time charges, it also showed a strong improvement, going from $24.5 million to $33.4 million. This metric suggests the underlying operations are getting stronger, which is encouraging. The steel manufacturing segment, in particular, saw its adjusted EBITDA more than double, which is fantastic. Now, no review of Live Ventures would be complete without mentioning the ongoing legal battles. The company and its executives are still involved in an SEC investigation, with the complaint alleging various financial reporting and disclosure violations. While the company denies liability, these kinds of investigations are never cheap or easy to navigate. They require significant management attention and can be a drag on resources and company reputation, regardless of the final outcome. The report also outlines a bunch of risks, and for a company operating in as many different industries as Live Ventures, there are certainly a lot. They highlight the significant amount of consolidated indebtedness, which is a major concern. With over $117 million in total debt outstanding, a big chunk of cash flow has to go towards paying that off, limiting flexibility for growth or weathering economic storms. They also mention the risk of interest rate changes impacting their floating rate loans. When you look at their balance sheet for stockholders' equity, it shows a positive trend. Total equity went from $72.9 million in 2024 to $95.3 million in 2025. This increase is a combination of earning more money that year and also reduced treasury stock purchases. So, what is the story here? Live Ventures Inc. is showing signs of operational improvement, especially in segments like steel and entertainment. The significant turnaround in net income is a relief after a tough 2024, though it's important to remember the impact of one-off financial gains. The high debt load remains a significant overhang, and the ongoing SEC investigation adds a layer of uncertainty. They're making an effort to manage their debt and costs, which is good, but the overall business health is still closely tied to the economic cycles affecting their various industries, particularly flooring and steel. They are actively managing their debt and trying to grow through acquisitions, but the legal issues are a constant cloud. What is your take on Live Ventures' financial health and their strategy moving forward? Let me know your thoughts in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more deep dives into corporate filings. And don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and I'll see you in the next one.